Hello and welcome to the UAN Budget Module Training. This is a recorded version of a webinar presented in May 2021. If you are watching this video in a later year, the information is still valid, the software has not changed, and it will still be meaningful. So when we're talking about the budgeting process, I want to make sure you understand we are not talking about the current year operating budget, which is managed in the UAN software under accounting, maintenance, revenue budgets, and appropriation budgets. We are talking about the tax budget that you prepare for the next year. So at this time, it is May 2021, and we are preparing the tax budget for 2022. Most counties still require the filing of the tax budget. If you are new and you don't know whether your county still requires it, you're going to have to give your county auditor's office a call to ask. At last count, I think there were 17 counties that had opted out of the budget filing, and they have their own procedures to certify your estimated revenue on an official certificate. So you have to find out those procedures if you don't file a tax budget. The fiscal officer is usually the person who is putting together the tax budget. You will, of course, have to speak with department heads and your governing board, but the fact is you are the one that has to give out most of the information required for the budget, so you will be the one probably doing most of the work. I recommend you start early, especially if this is your first or second year preparing the budget. It's a lot harder. You only do this once a year until you've done it a couple of times. It's a completely foreign process, so make sure you get started on this early so that you're not scrambling at the last minute. The budget components, just like in your current year operating budget, has to contain two components. The resources available, so you have to figure out how much will I have available to plan to spend. And then your planned expenditures. We think that when January rolls around, we will be appropriating this much. But this is just a plan, not adopted appropriations. The resources available are certified by your county auditor or budget commission. When you file the budget, your county budget commission returns to you an official certificate of estimated resources, and that document sets the maximum amount your board can appropriate for the following year. It governs that maximum until in the next year your first amended certificate is issued. The tax budget is adopted by the governing board this year. It contains planned expenditures that could be used for the permanent appropriations in the new year, but it isn't the appropriations. When you roll around to the next year, your board has to adopt appropriations. So you can't just lay the budget in front of them and say, let's implement this. Each year, the appropriations are actually adopted. You'll need to work backwards from your deadline, so you have to understand what they are. Now, if you are a library associated with a school district, your deadlines are much earlier than townships, villages, and special districts. So libraries with a school district, make sure you understand your deadlines are earlier, and you will have to contact your county auditor if you don't know what those are. So for the most part, our clients have the deadlines of adopting their budget by July 15th, and you have to get it filed with the county auditor's office by July 20th. Now, just because the deadline to adopt is July 15th does not mean you have to wait till July 15th to adopt it. So you want to be able to get this done with plenty of safety net time to spare, because we do have folks that end up not getting a quorum at the meeting intended to adopt the budget, and they have to choose a new budget hearing. So let's talk about that. You need to know what meeting dates you will have to review and work on the budget. So if you look at your schedule of meetings from this point forward, between now and July 15th, some of you are only going to have the June meeting and the July meeting. So I would recommend that you have a lot of discussion with your governing board at your June meeting and so it can be adopted early in July. Now you have to set a budget hearing, the date and time that the budget will be discussed and adopted. We have a lot of entities that simply schedule the budget hearing 15 minutes before their regular meeting. We have others that schedule a different date altogether, and they have a meeting that is only the budget hearing. So make sure you understand the rules governing open public meetings and the discussion of the budget, and set your budget hearing accordingly. You have to publish in the newspaper a notice of your budget hearing at least 10 days before the budget hearing. So your public has to have 10 days notice before this budget hearing. So make sure you are leaving enough time that if you had to reschedule the meeting, you could. So if that meeting has to be scheduled again, you still got to get the ad in the paper 10 days before the new budget hearing. And what's really funny is, at the time the ad hits the newspaper, 2 copies of the budget should be available at the office of the fiscal officer for viewing. You can't really be putting together your budget hours before the budget hearing and be in compliance. So make sure that 10 days before you've got the budget finished and ready to put in front of your governing board. Okay, let's talk about the timeline for the official and the amended certificate. Over the years, I've had several fiscal officers tell me that there's just no point in doing this budget. It's just useless. Well, I don't agree, because what you put in the budget for your revenue estimates, your county budget commission is going to certify those resources available, your revenue estimates, and the estimated carryover balance, and you're going to be using those. So let's talk about this timeline. So, May, June, and July, you're going to be getting that budget, start working on it, get it adopted by the board, and get it filed before the deadline. Definitely start working on it in May, because you're going to have those conversations with your governing board. Notice there's asterisks on there. So remember, the actual deadline to adopt is July 15th. I would highly recommend, if you've got 2 meetings a month, you might want to target the second meeting in June, or close to that. Especially if you meet only once a month, make sure you're giving yourself some wiggle room for having that budget hearing. Okay, so what happens? You file your tax budget. It's adopted and filed on time. And then what happens? Well, your county budget commission will review it, and then they are going to certify your official certificate of estimated resources. Remember, that document is going to limit the amount your board can appropriate in the new year. So they're using the figures. When this comes back to you in September, you need to compare the taxes and other sources they've certified with your revenue budgets, because you need to know whether the county budget commission certified your figures or whether they increased or decreased your figures. If they've changed what you requested to be certified, you need to make notes in your copy of the budget to what the numbers should be come January, because you're going to be using the same revenue budgets that they certified on that official certificate. In some counties, they won't let you change them. They'll make you file your first certification with those revenue estimates and then request an amended certificate for a change. Other counties will allow you to request a change when you certify your fund balances. So for example, after we filed the tax budget, they increased the water or sewer rates, so our new estimate for revenue will be X. So you have to know whether your county is going to allow you to request that change in your first submission. Okay, so what do you do between October and December? You start preparing your temporary appropriations and get those adopted by the board to take effect January 1st so that you're ready. So what happens in January and February? Well, you're going to certify your actual year-end fund balances and carryover encumbrance, and as I said, those revenue budgets. So does your county hold you to the revenue budget that they certified on the official certificate, or do they allow you to tweak those numbers because there has been a change? You'll have to know so that you know what your revenue budgets will be. You do need to understand that your revenue budgets are going to have an effect on how you are going to operate at the beginning of next year. So one of the first things you want to think about is what funds should be included in my tax budget. Well, why would I be asking these questions? Well, we do have a lot of entities that have a capital project or a grant fund, and it's only open for the years of that project. A lot of them are 1 year and gone. So if you have any of those capital project funds, they're already completed and spent to zero, and there's not going to be any more revenue or expenditures, then that fund does not need to be budgeted in the new year. A grant fund, a lot like our coronavirus relief funds that people got in 2020, those were extended to be spent through 2021. But unless they do another extension, there would be no need for you to budget those funds in 2022. Do not include them. If you have a brand new project that has already been approved, you've already got the grant award, and you know the project is going to take place in 2022, you would want to include that. If you've simply filed a grant or a loan application, and it's going to be many months before you receive a notification that you've been selected, there wouldn't be a need to add those funds, but I think I would budget any matching share that we have committed to the project. So if I filed an OPWC grant application for a project in 2022, but we just filed that application and we're not going to know until next January whether we get the grant, then I'm going to budget my matching share. We sent a certification with the grant that said we will commit this much money to the project. I'm going to budget that in the fund that is going to spend it. Whether I budget it as a capital outlay or if it's going to be in its own fund, I think I would budget it as a transfer out. So you can budget your matching share without budgeting the capital project fully. All right, your budget year resources available starts with your estimated 2021 year-end unencumbered fund balance. So here it is May, and you're supposed to be figuring out how much each fund is going to end with December 31st of this year. You know, right off the bat, you're thinking, I have no idea how much money they're going to spend before December 31st, but you do have to make a guess. The UAN budget software uses the formula that many counties require. And let's talk about that, because this is the starting point of the budget financial worksheet. And you'll have to know what your county allows to know if you're going to keep that starting point or change it. The budget software takes your 2021 certificate of resources, so that is your cash carryover balance plus your estimated revenue for 2021. That's your current amended certificate, right? And then it's going to subtract from that figure what you have appropriated. And that gives you your estimated 2021 year-end fund balances. So some of you are scratching your head saying, wait a minute, we appropriate 100% of our resources available. That's right, your estimated 2021 year-end fund balances are going to be zero because the formula says you start with your amended certificate, subtract your appropriations. That's the estimated fund balance. So if your county holds you to that, then you will be budgeting from a beginning balance of zero. So you have to find out what your county allows. So I'd say the first thing you're going to do is call your county auditor and ask, should I reduce my current year expenditure column in the tax budget to what we think we will spend this year? Or do I have to use the actual 2021 appropriations as if they will be spent? So you need to know if your county auditor is going to allow you to use a reduced expenditure to come up with a different, a more realistic year-end balance. Now in the software, you can use either method. Remember that in January, when your permanent appropriations were adopted, you sent those to the county auditor. So they have a copy of your appropriations. Okay, remember your current year resources available that are certified on your amended official certificate of estimated resources, commonly known as the amended certificate, is going to set the maximum appropriations the board can adopt. What you need to know, if you are new and you didn't create those revenue estimates, are your current revenue estimates good enough to use for next year? So you're going to have to delve into that and look and see if the estimates are going to hold up. And the reason you need to get those good estimates is because you're going to be meeting with your department heads and your governing board members, and they're going to be telling you, I want this, that, and the other, and you're going to have to be there saying, wait a minute, if you want to pay the electric bill, you are not going to be able to do this. Or if you want to pay wages at the current rates, you're not going to have money to do this. So you're going to be the one that needs to know what those resources available are going to be. Let's get over in the UAN software and take a look at the budget module. Okay, this is the budget module. You can see that when I click on the budget module, it turns yellow, and I can get through to transactions and reports to see those menu items. If your budget module does not highlight yellow, like mine does, and you can't get to these menu options, it means that it's been deactivated on your system. You would need to go to General, Maintenance, and Entity Setup, go to the Modules tab, and right here in the center where it says Budget, you would mark Active and click Save. So as long as it's marked active, you will have access to it. While we're here under Entity Setup, let's check the System tab. And under the System tab, you can see under Budgetary, my custodial funds are set not to be budgeted. They must not be budgeted. So what that means is if I have any custodial funds, they should not appear on my amended certificate. My board does not appropriate any money, and I don't use them in my tax budget. So those are custodial funds, other people's money I'm holding. Not everybody has a custodial type fund, so you'd have to know. Take a look at your amended certificate, and under the section on fund types, do you have anything under custodial? If they appear on your amended certificate, you probably are budgeting them. Take a look at this setting under Entity Setup System tab. We're going to click Close. And now we go to Budget, and under the Transactions, we'll find our financial worksheet. Under Reports, we find the 7 companion reports that get filed with the tax budget. Okay, we'll go over these at the end of the webinar. So let's go back to Transactions and Financial Worksheets. Everybody has the prior year master worksheet listed here. However, everybody does not have 2 years of history posted in the UAN software. We have many clients who started on UAN in 2020 and 2021. So they don't have history for 2 closed years. In this case, it would be 2019. Any client who started on UAN in the current year doesn't have any prior year history to pull in. And the tax budget is supposed to contain 2 prior years, the current year, and 1 projected year. So only the entities that have not closed 2 prior years would have to edit the prior year master worksheet and enter those 2 years of history. So notice when it opens up, mine shows me 4 years of history, 17, 18, 19, and 20. So if you open this up and you can see 4 years of blank history, please don't go to the trouble of filling in 4 years. You only need 2 prior years for the tax budget. So you would get these figures from either your annual financial report or from 2019. If you looked at the tax budget that was filed in the prior year, you would see 2019 history and could fill in those figures. 2020 you would have to get from your annual financial reporting. And once you enter the revenues and the expenditures and anything on the other tab, which would be like transfers in or transfers out, you would save and close. Again, the only people that have to edit the prior year master worksheet are people who have not closed 2 years in the UAN software. Everybody else is going to leave the prior year master worksheet alone and simply click the Add button. So I'm going to click Add. I have to give the worksheet a name. I'm just going to call it 2022. And I have to choose the funds I want to include in the tax budget. So there's my unclaimed money fund, and I've already established that that's a custodial fund that does not get budgeted. So I'm not going to include that one. Some of you may have some capital projects that you completed in the current year or will complete in the current year. There is no reason you would budget them or include them in the tax budget next year. If they're going to end this year in a zero balance and the project is over, don't bother including it next year. Okay, notice that the system is going to default with 2 prior years and 1 projected year. Of course, the current year will be included as well. And we go down here to the setting prior year carryover. You can always click the blue question mark for more information anywhere you see it in the software. It's just going to provide more information. The carryover encumbrances, you can use this setting to include the carryover encumbrance with your current year column. If you choose this setting, your carryover encumbrances are not included. Now you notice that it's recommended that you include the prior year carryover encumbrances because you would have a more accurate figure for spending. However, since some county auditors expect you to show the current year expenditure column as your full appropriations, it's not really going to be very realistic. So you need to understand what your carryover encumbrances were. If you just had a few unpaid withholdings, it's not a substantial amount, and a few purchase orders or some blanket certificates carried over so the bills could be paid, there is probably no reason to include them. But if one of your funds that you're including in this budget purchased a large piece of equipment, let's say we ordered a fire truck, and in the current year we put a down payment on the truck and placed the order, and we've got a carryover purchase order for the balance of the cost of the vehicle, and it carried over. So we have a very large carryover encumbrance, and when that truck is finished being built, and we pay for it using the carryover encumbrance, that's going to substantially decrease my fund balance. But it is not using current year appropriations. In a case like that, you would definitely want to include the prior year encumbrances. If you really don't understand the significance of each of those settings, you can add a worksheet with the carryover encumbrances and add a worksheet without the carryover encumbrances and print them and compare them to each other so you can see. So I'm going to choose the recommended setting so you can see what that looks like and click OK. The worksheet opens. It's pretty busy, so let's go over the structure. In the upper left corner, you see the name I gave it. Next to it, you see the drop-down list of all my funds. The software always opens to the General Fund and the Revenue tab. You can see there are 2 prior years and 1 projected year. That's 19 and 20, my prior years. I have the current year and the projected year, 2022. I have a Revenue tab for all my revenue accounts, an Expenditure tab for my normal expenditure accounts, and there is an Other tab for those odd things that are not common. Now, some of you have transfers out that you do every single month, and some have a couple of transfers out a year. You would use, you're going to find those transfers out and in on the Other tab. So you might need to click on that if you're looking for an account and it's not listed on the Expenditures or Revenues tab. Every time you click Save, let me go to a different fund. When I click Save, I see in the bottom left corner it's saved, and I went back to the General Fund. So every time you click Save, it's going to take you back to the general fund, and you would select your next fund on the list. So you can make entries on the individual tabs without saving. You won't lose any information tab to tab. But if you change funds without saving, you will lose the data you just entered under that fund. Okay, let's go to the Expenditures tab. And now you're going to need to know what your county auditor requires for the Expenditure tab in the current year. Does your county auditor require you to consider current year appropriations as if they were spent? Or do they allow you to change the current year expenditure column to reflect what you think you will spend? This is going to affect your current year estimated ending balance. So we need to know what your county auditor requires. Now, in my case, that doesn't look too bad because we have $145,000 that's not been appropriated this year. Let me show you what that means. If I go to Accounting Reports and Statements, Budgetary Reports, and I choose the comparison of budget and appropriated, the software is going to show me the comparison of my amended certificate, that would be this column. This column should match your amended certificate minus my current appropriations. So my board adopted appropriations and I entered them in the software, and these are the figures. If I subtract the appropriations from the total amount we are allowed to appropriate, I see what the variance is. And variance means resources not yet appropriated. So you shouldn't see negatives in the variance column unless you are being monitored by local government services and you have a negative fund balance, which would be unusual. So if you don't have a negative fund balance and you're not being monitored, you should not see any negatives in the variance column. It would mean you have over appropriated. So in every one of these funds that has a variance, that's going to be my estimated year-end fund balance, because the software is going to use the formula that some counties use. Total resources available minus current year appropriations equals the estimated year-end fund balance. Okay, remember in the slideshow I said that if your county allows you to, you could change your 2020, that's your current year column, expenditures from what is appropriated to what you think you will spend. And of course there would have to be some thought process in that. If you're new, you're not going to just be able to sit here and go through these numbers. Now, if you've been fiscal officer for 15 years, you've done 15 years of budgets, you probably could sit here and do that. Let's say I always put a cushion. You see that says $40,000. So some of that is carryover encumbrance and some of that is what I've actually appropriated. So if I am allowed to change this column to what I think I will spend, then I should not have used the carryover encumbrance setting. So how would I go about doing that? Well, I'm just going to type right over it. I still want to leave a cushion in there. Notice my year-end fund balance. See that at the bottom, 145, 842, 35. As I start changing these numbers, it's increasing my estimated year-end fund balance. You want to be careful not to underestimate what you might spend. So I've just done a couple of them. So you can see if you're allowed to change that current year column, it is a simple matter of deciding. And of course, you're going to need to look at reports. You're going to have to understand what your appropriation represents and how much of that you think you're going to spend. Okay, so we're going to use just part of this general fund as that example of the county auditor allows you to change that. So for those to be saved, I'm going to have to click the Save button. And that means my estimated year-end fund balance is now $189,000. So you can't just go to the estimated year-end fund balance and change the number. You simply have to change the expenditures to what you think you will spend to end with more. Okay? So once your current year column is what it should be for your county, remember you're going to choose each fund and complete that process for all of them. My gasoline tax fund and my road and bridge is easier because it has fewer accounts. Let's take a look at an easier fund. So I'm going to go to the road and bridge, and you can see I have fewer account codes there. But this fund is appropriated at 100%. So my current year estimated year-end fund balance is 0. And if my county does not let me change the current year column, that means next year I can only plan to spend the estimated year-end balance plus the estimated revenue. So once your current year column is what it should be, we can start working on the revenues. Okay, and on the revenue tab, let's go back to the general fund. So what if you weren't the fiscal officer in 2020 and 2019 and you've just been appointed this year and you are not the one that came up with these revenue estimates? The first thing you need to do is verify that they're good revenue estimates. You have to know if these numbers are right before you can decide if that's the same number you want to use next year. So let's save and close. I'm going to take you over to Accounting and Reports, and we'll take a look at some revenue reports. The revenue status is a good basic top view report. This shows each account code, what has been budgeted. This is saying to the county auditor, I think I will receive this much. Okay, and the county auditor does not see the individual account codes. They lump everything into taxes and other sources. The taxes accounts are usually general property tax and property tax allocation. These are where your rollbacks come from. So those two numbers combined is usually what is represented by the taxes column on your amended certificate. So the budget column is how much you think you will receive. The revenue column is what you have posted in receipts so far this year. So in May, it's not going to give you a very clear picture of whether these are good revenue estimates. You would have to look deeper. Things like rentals and leases might have a seasonal peak to where you rent them more in the winter and less in the summer. So you won't see these rentals go up until the weather starts getting cold again. It's possible. So you have to understand, local government distribution should be coming in every month. Liquor permit comes in once a year, cigarette once a year. General property tax and the property tax allocation, you get usually 2 distributions of your real estate tax, first and second half, and your first and second half rollbacks. Interest is probably posted some every single month, but you might have investments that post quarterly, or when a CD matures, you post interest. So you have to understand, am I supposed to be looking at that by month, or am I going to get a big lump in the middle of the year when a CD comes due and rolls over? So you need to understand what your revenue is and then take a look at prior years. So we can look at a prior year, look at 2020, and I have to say that 2020 is probably never going to be used as a normal year. It was certainly not normal for revenues or expenditures, but you can see this report always generates as of the end of year when you're looking at a prior year report. So this is what the final budget was as of December 31st, and you're looking at that going, wow, that fiscal officer got these numbers pretty close. Well, keep in mind that most fiscal officers toward the end of the year request an amended certificate to bring their revenue estimates up to date, especially when they've received more. Okay, so how would you know? So when I'm looking at the revenue status and I'm thinking, well, how am I going to know what the difference was January 1st to December 31st? Well, I recommend you look at the revenue supplemental report for the same year. So if I looked at the revenue supplemental report, I can see that in August we got an amended certificate for that $45,000 grant, and in November we certified a little bit more revenue to that fund, and then the rest of them are all dated December 11th for the purpose of getting an amended certificate. So that means on December 11th I took a look at my revenue estimates and I brought them up to date for my certification. So you need to know when the last chance you will have to get an amended certificate is going to be. When will your budget commission meet for the last time this year so that you can get an updated amended certificate before year end? And so you can see by using the revenue supplemental report when changes were made in a prior year. See, these were all made in December to bring the revenue estimates up to date. Now this is not a good one to be doing. Look at that huge amount being added. That would, unless you just got that money in December, that probably means if you were a township that bumped you into the next pay scale and the elected officials should have gotten a raise. Now that might have taken place right around December 17th. That might be what triggered that fiscal officer to get the amended certificate at that time and just bring all their accounts up to date at the same time. So make sure you're checking that every time you request an amended certificate. If you're a township, the elected officials' wages are based on your current resources available. Let's get out of there. Okay, now let me show you how to evaluate what was posted to account codes in the prior years. So we're on revenue reports, accounting maintenance revenue reports, and from the drop-down list, choose revenue receipt register. Revenue receipt register is a lovely jewel. I'm going to say the year 2020. I want to mark it by year because I want the whole year's postings. All right, so Revenue Receipt Register 2020, and I want to see what the former fiscal officer posted to this account code. So I'm trying to evaluate if the two prior year posted history in the budget financial worksheet is accurate for me to determine what we're going to get next year. So I can display that. And it shows me that there were 2 receipts posted to this account code last year. 2 memo receipts from the county auditor, one in April, one in September. So that's my first half and my second half taxes. Some of you will see 4 because you have manufactured home real estate tax that comes in right after your regular property real estate tax. So you would see 4 memo receipts. I can see there are 2, and that's accurate for me. We don't have manufactured homes because this is a fake township. And we're just not going to make it that difficult. Okay, so if I were to see maybe 6 or 7 receipts and they weren't from the county auditor's office, I would know the wrong things have been posted to this. If I only saw 1 memo receipt and nothing else, where did the other half taxes get posted? So use the revenue receipt register to evaluate if the right things were posted. Let me show you another example. If I go down to gasoline tax, well, we get a gasoline tax distribution every single month. So when I look at gasoline tax, I should have 12 receipts, 1 posted every month. And you can see gasoline tax is posted here. And mine, of course, is coming from the Treasurer of State. I don't know if that's how yours is distributed. Again, remember, this is a fake township. So we're just posting receipts to show data. Local government services, that comes in once a month from my county auditor. Do I have 12 receipts? That's the question I'm asking myself. Okay, I have 12 receipts. However, wrong things could have been posted, right? So if I want to evaluate what this amount is made from, I would take a look at the receipt. So it shows me standard receipt number 14. Now I could go look at a receipt report for 2019. Receipt detail is fine. 2019, receipt number 14 from my county auditor. And physically you could look at, you could pull your deposit ticket and your documentation that came with this payment to see whether or not they were distributing local government or maybe gasoline tax, cigarettes tax. So you want to look and see what was on the original receipt and the deposit. Is this posted to the correct account code? So if the description here said local government and cigarette tax, then you know that this account code has been inflated by something that should have been posted to a different account code. So you can move around looking at reports for prior years to determine if what has been posted to these account codes reflects what you should be evaluating to determine what you will receive in the new year. When you're ready to add your revenues into your financial worksheet, you want to mark it and click Edit. And notice, Update Financial Worksheet form is right in front of my worksheet. So what does this mean? We get a lot of calls about this. So for you folks that are changing the current year expenditures column, the software is now telling you that your live budget in your accounting software no longer matches what you have in the current year column for expenditures. Well, you know that because you made the change. What this is asking you is if you want your software to be updated back to the current year budget. Well, of course the answer is no. So if the answer is no, don't select the accounts and click OK. Now, if you have made changes in your live accounting that you do want pulled into the budget, you would check mark the item and click OK. But if you want these to remain as changed, don't select them and click OK. All right, so we're going to be on the general fund, of course, when we come in, the revenues tab. So you figured out what I should be receiving in the current year is accurate, and what I plan to receive in the new year has been figured out. How do I enter that in the software? Well, you can type the number. So I'm looking at that saying 140,000 is exactly what my county auditor is going to certify for taxes. So I could go to the trouble of typing it, or I can tell the software I want a 0% change. So here's my property tax allocation. That's the second account code that makes up the taxes. If I want the same number in the current year column to be reflected in the new year column, I change the percent to 0%, so it's a 0% change. And the software will do the typing for me. So do you see that? So use your accounting reports to evaluate and determine what your 2022 revenue estimates should be, and then enter those in the software. So we think this is a very good estimate, and we're keeping that the same. We have changed our fee structure, and I know that we will probably receive more in 2021, but I haven't requested an amended certificate yet. That 300 number is my revenue budgets. I'm simply going to change the 2022 number to 3,000. So you can see the software is going to let you skip around and hit the accounts that you know and pause on the accounts you need to think about. So if you've been doing this for several years, you're going to skip down here pretty quickly. You don't want to skip anything. Make sure you're budgeting every account you're going to get money on next year. And interest is something you always want to evaluate. The interest is going to change depending on how much you have invested and the interest rate. And we know that we had a lot more invested in 2020 because spending kind of came to a screeching halt when projects had to be halted. So we invested a lot more money. We are going to be spending a lot of money this year, so we've estimated less, and I think next year we're going to be earning even less in interest. So think in terms of how much money is invested and what your interest rate is, and make a good estimate of your interest. Okay, rentals, sometimes seasonal. With the pandemic, rentals stopped for a while. So if I looked at my current rentals, it might not give me a good idea because inside rentals tend to be, when the weather's colder, and outside rentals happen all summer, but not so much in the winter months. So think about what you're renting and how often it rents and what the seasonal rental is usually scheduled as. So we're going to say that's about the same. And other miscellaneous, we rarely post items to that, and I don't budget it. Okay, so once you've finished your general fund, a lot of people would say, let's go ahead and do the expenditures, but I like to create the resources available before I start looking at expenditures. So I focus on all revenues. So as you were entering the 2022 revenue budgets here, your ending fund balance is increasing. Let me show you that on a separate fund. I saved, so I'm going to go to the gasoline tax. So my estimated year-end fund balance this year is 0. So my starting balance is anticipated to be 0. This is an example of my county auditor does not let me make the change to the current year. So on my revenues tab, I'm going to estimate my revenue, and we think the gas price has gone up considerably and we should be receiving more, but I don't want to inflate that too high. So I'm going to say 578 because those gas prices could go right back down in another month. So please don't use this conversation as a determiner of whether you should budget more in gasoline tax. I just want to show you that you can. Now, when I put that number in, my estimated ending fund balances is now exactly the number I put in for revenue because we have a 0 ending prior year balance. So you see you're actually creating what you'd like to call resources available as you're putting in your revenue budgets. Estimated year-end fund balance plus revenue budgets is the amount you will be able to plan to spend. So again, interest, I think I'm going to be making a lot less in interest next year because we're spending a lot this year and I'll have less to invest. So that means I can plan to spend $579,000. So I like to get all of my revenues in before I start planning my expenditures. Now, at any point in time, I save that, it's gone back to the general fund. I want to show you something. Let's say you get your current year, what it should be for your county auditor's process, and you got your revenue budgets in. Now you can start having those conversations with your department heads and your governing board because you have a number. We think we have this much available to spend. Now, it would be really smart, let me go back in here, if you were to fill in the fixed cost. No, I do not want my budget updated. Fixed costs. What are fixed costs? Electricity, telephone, salaries, Medicare, OPERS, OP&F, Social Security if you have to pay into that. Fixed costs. So if we think this is how much we're going to pay in wages, you can figure the employer's share of Medicare and the retirement. Medical and hospitalization. So if you take a look at this and you say to your governing board, we have $470,000 available to budget for next year in the general fund, and they start saying, well, let's buy $100,000 this and $150,000 that, you better make sure you've shown them the fixed costs first. So if you know what the fixed costs are going to be, budget them. Remember, we budget a cushion in our trustee salary accounts in case more has to be paid from the general fund. So I'm going to budget $35 for that cushion, $25 for the fiscal officer, and we always budget an assistant in case of health reasons. Somebody has to come in and take over. So my OPERS would be an estimated 14% of that figure. I just need to make sure what I'm budgeting is going to be enough in case we do pay those amounts. Medical and hospitalization, I think, is going to go up 2.5%. I won't know until the contract comes up in September. So you see, as I'm filling in these fixed costs, I'm reducing my resources available to budget. So if you go through and fill out the fixed cost, I think dental insurance is going to go up 1.5%. Unemployment is probably going to stay the same. Accounting and legal fees, the same. UAN, tax collection fees. A lot of these are fixed costs. Election expenses usually happen when you have something on the ballot. So you may not have had an expense in the last 2 years, but if this is the year you're going to be putting a levy on the ballot, make sure you're budgeting for that. In our case, it is not. Engineering services, we budgeted this year, but I am not going to budget for that next year. You want to budget for your garbage. Travel, telephone, postage, advertising, electricity, water and sewer, gas. Make sure that for utilities, you're budgeting for hot summers and cold winters, because it is much easier to live with a cushion in those accounts than to try to find appropriations in December to cover that last bill. So I need at least $5,000 in contracted services to take care of things. That is our health district, our insurance premium, bond premium. So some of these things you need to be telling the board, this is what I think are going to be what we have to budget for these accounts, because currently these are the things we pay. So you see, fill out the fixed costs, and I'm going to say from there, pretending as if I did all of the fixed costs, and then leave unbudgeted the accounts where there's discretion. So we have some extra spending that could be there, because you only have so much available to budget. So once I've saved, you guys can print a copy at this point. Let me show you what that looks like. If I use the display instead of print, it's the same settings, and then you'll be able to see it. So I'm going to use display. At home, you would use print to print it. You want to include the account codes. This is extremely important when you're using internal working copies that will help you. Selecting all my funds that I've budgeted, and this is what it's going to look like. I have a printed copy. I can walk around, sit down and talk to the department heads and show them, these are the things that I've budgeted for revenues. Therefore, we have only this much money available to budget. How much do you need for? So you would talk to the cemetery sexton about what equipment is going to need to be replaced next year. You would talk to the fire chief or the police chief about what training would have to take place to keep people certified. Also in water and sewer plants, they have training to keep their certifications. So make sure that you're budgeting enough for training. Operating supplies, you've got to budget enough for fuel costs in case the cost of gas goes way up. Make sure you're putting a cushion in those operating supplies. So make sure you've at least put in the fixed costs so they can see how much left they have to play with. So in the general fund, I only filled out enough to, let's say, fixed costs, and then this ending balance right here is the amount of the resources are still available to budget. So they would say, well, I want to do this, I want to do that, let's add a cushion here, we're going to fix the roof on the town hall, or we're going to replace a vehicle that's going to be paid for by the general fund. If you don't fill in the fixed cost, they don't know how much wiggle room they've got. Okay, so you can always print this. You can also export the worksheet, but I wouldn't recommend using the exported version to complete, because then you will have to sit and fill it all in. You could do it if you want to, but the export, simply check mark it and click export. Again, include the account codes, select your funds, and it exports. Let me show you. You have to save it, and let's open that. So the worksheet looks like the printed version does. You've got the account codes because you chose the account codes to be included. But notice, here's your total. If I change a number, It does not change my total. This is not a formula. It is simply the number that was in this place at the time you exported. So these are not formulas. They're not going to update. You have to know what you're doing with the spreadsheet to create the right formula. Okay, so it is exportable. Once you've got some figures, you'll be going back to meetings. For example, let's say you talk to your cemetery sexton and he says, well, I need, the mowers are running out. I need a new zero-turn mower and they cost, I want to spend $17,000 for 2 zero-turn mowers. Don't just think you can stick that in the budget because that has to get past the board. So at the very next meeting, before the budget hearing, I'm going to go back to the governing board and I'm going to say these are the items that have been requested by the department heads to include in the budget. And when I get to the cemetery and I say 2 zero-turn mowers, $17,000, the trustees laugh and they say we are never going to buy him a zero-turn mower. So you see what I mean? Department heads can ask for things, but the trustees have the final say. So make sure you're running this past them as you're entering them in the budget. For those of you who have been fiscal officers for many years, you can go down this list and budget for the new year without a lot of research. But for those of you who are new and you were not the fiscal officer in the 2 prior years, and last year was such a strange year, you really do need to know if what you have budgeted this year is a good idea of what you should be budgeting for expenditures next year. So let me show you some accounting reports that will help you determine if the prior year history is a good guide or if things were posted incorrectly. And you have to consider how contracts have changed, things that you have to pay may have changed, new debt or old debt that was paid off in 2021 that will not need to be budgeted for payments in 2022. You need to go through some physical records and some reports before you can start entering these expenditures. Remember to always save before you leave the software, and let's go to accounting. Reports and statements, appropriation reports. So I can look at my appropriation status to see where we are in spending right now. It's probably not going to help me much to determine whether I'm on track because not all spending is by month. With utilities, electric and natural gas, it fluctuates with the weather. So we haven't really hit the hot summer months that would bump up your electricity, or the other half of the cold winter months that will bump up my natural gas. So at this point, you're really just looking to see what your current year is budgeted. You're going to do a lot of looking in your prior years. So let's say you want to look at what was posted as payments to a particular appropriation account. For those of you that have inherited a system where everything is posted to other miscellaneous, other expenditures, and they really should have been posted to better account codes, you're going to need to look at those and see how to divide up that budget. So I would want to click the drop-down list and choose appropriation payment register. So just like the revenue receipt register, I can look at a prior year, and I'm going to look at 19 to see what items were spent from a particular account. So if I go down through here and look at contracted services in the 2021 fund, I can see we paid our paving out of that. If you see payments that really should have been made from the proper account code, then what happened was they started running out of appropriations and the fiscal officer just started grabbing other account codes and spending from them. So you want to be looking to see if items were posted accurately. For example, if I look at electricity, I should only see payments to my electric company. And I do. There's Sparkly Electric. If I saw the telephone payments here, once again, I would know that my total amount spent from this account code in 2019 is not an accurate reflection of electricity. Now, if your utilities are paid from together from an other utilities account, you would see a mixture of all of them, the ones that should be paid from that account. So it's okay to have a less detailed account, but you have to make sure that, again, office supplies aren't paid from utilities. So you're just going to be looking at the appropriation payment register to determine if those prior year histories are good enough for you to use to estimate. You don't have to fix them. You just have to stop spending that way. You would want to make sure you are planning to spend from the right account codes, okay? Another report you want to look at for prior years is the appropriation supplemental. So you can see on the appropriation status what the total appropriations by account code was as of December 31st, but just like revenues, you want to see how much they had to change, because in some entities they keep adopting the exact same appropriations every year and haven't updated that at all. They tweak one or two numbers, like in other miscellaneous, but all the other appropriations are the same. And the numbers aren't good, so they have to reallocate appropriations all the time. So if you look at the appropriation supplemental report for those prior years, so go back to 2019 for the year, I can see that not much was changed. So they did a pretty good job of appropriating. There was just a little bit of reallocation in 2020. Now, some of these are not reallocations, but brand new appropriations because of the grants we received. And probably these as well. These might be supplementals. So when you have a negative and a positive on the same date, it's more likely that it's a reallocation of appropriations so that the appropriations are in the right place to spend money. Okay, so this list is the difference between what my permanent appropriations were at the beginning of the year and what they were at the end of the year. I needed these changes. Okay, so you can do that for both years. Another report I like to use is general reports and statements, vendor payee reports, and from the drop-down list, vendor payee payment register. Vendor payee payment register. I would look at that for the prior years. I'll look at 2020. Again, 2020 is simply a bad example of a normal spending year. We all know that. I want to also go to the sorting tab because the software automatically sorts each vendor and shows each check number and its account codes. But when I'm budgeting, I want to sort it by vendor and account code, not by checks. I could do a report in accounting reports if I just wanted a payment report to each vendor. So I want to see a list of the vendor payments by account code. And I'm going to choose one for you that will be interesting, I think. So let me use Sparkly Electric. So Sparkly Electric gets paid for the electricity for all of our buildings. So we get several electricity bills, and they're paid from multiple account codes. So 1120 in our case is paying the electricity at the town hall. 2021 is the road building where they do the work on the vehicles and they have the garage. So this is the amount of electricity for the year by account code, not by check number. You can still see the check numbers, but it's nice to see this group by account so that you can see how much electricity was budgeted and how much was actually spent. This is especially useful if your utilities are budgeted to an other utilities account. You can see how much was electricity, how much was natural gas, and how much was other, for example. Okay, so I like that. Vendor payee, payment register on the sorting, sort by account. Very helpful when budgeting. Okay, and then once you have determined these really are the fixed costs, you want to go back in and enter those fixed costs so that you can have an understanding of what your governing board and your department heads will have available to plan with the rest of that money. And you're ready to put all the final figures in. Once again, as soon as you edit that, the software is going to show you this is what's in your live appropriations, and this is what you have in your worksheet. If you have purposely changed the current year column in the budget worksheet. You do not want to update these figures. Do not select them. Click OK. All right, go through and complete. I'm not going to use the general fund because there are so many account codes. Let's say gasoline tax. So we've completed the revenues, and I go to the expenditures tab, and I know what we're going to budget now. So we're going to budget the same here and here. For class purposes, you see how fast you can go through there and say I'm budgeting exactly the same until I get down to these things. We do not need the engineering services because we're not doing anything. I do need to budget telephone, electricity, and the contracted services. This is where we do our paving every year. So I don't want to say it's the same amount because look at the bottom. Look at the fund balance in the bottom of 2022. I only have $161,000 left to budget because we're doing so much paving this year. We will not have as much to budget next year. So if I tell it I want to budget the same thing, I have budgeted $196,000 over what I'm going to have. So not going to do that. So I'm going to fill out my other fixed costs first. Operating supplies. And we're not doing any capital outlay. And now I know that what I have available to put in the paving account, make sure I don't have anything else, what I have available to put in for paving, 143,670.40. And that fund is budgeted to zero. So using this method, if my county expects me to budget to zero but not beyond, then I need to make sure I'm not over budgeting. So if the expenditures that you're entering in is going to take your new year fund balance, the ending fund balance below zero, that means you're exceeding your resources available. So you never want to go back to the revenue tab and falsely inflate your revenues. That's not the way to do this. You cannot do that because those revenues are going to be certified on the official certificate. Don't put fake revenues on the revenues tab in order to give you enough money to fill out appropriations. That will backfire terribly. So you will have to contact your county auditor to determine if you're allowed to budget below zero, entering all planned expenditures, even if that estimated 2022 year-end fund balance goes negative, or whether you have to budget to zero and then enter planned expenditures until you have a zero remaining and then footnote the items that you want to budget if you roll over with more money. So make sure you know how to use the software. The software will let you do it either way, but your county will accept it only the way they want it done. Anytime you do a footnote, you want to start with the account code because the footnotes, when they print, they don't start with the account code. Okay, you see that? I got the account code and then the note to myself to appropriate more next year if we have a larger carryover balance. Okay, so if we have more available to appropriate, that's where I want to put it. So I have a footnote for me there for next year. Okay, this fund is budgeted to zero. All of its resources are planned expenditures. Let's go to the Road and Bridge Fund. Okay, we've already put in our revenue budgets, so that gives us $12,014 to budget for next year. If my county auditor allows me only to budget to zero, then I'm going to have to do the same thing I did on the gasoline tax. Put in my fixed cost, and then I've got $11,489 to split between two accounts. So I'm going to put 6,489 here and 5,000 here. And that's budgeted to zero, and then I would footnote the extra I want here. So for example, I've budgeted 5,000, I really want to budget 9. The footnote would say, if we carry over with more, increase to 9,000. Again, this one would say, if we carry over with more, increase to 18,000, up to. Okay, make yourself note. So that's budgeting to zero. Now, some county auditors allow you to budget the new year fully below zero. So they know, unlike the other county auditors who who let you change the current year, they know that they're going to force you to end with your estimated year-end balance based on your current year appropriations, but they also know you probably won't spend that, and they allow you to fully budget the new year even if it shows to negative. So you have to know if your county will only allow you to budget to your estimated 2022 fund balance is zero, or whether they allow you to budget fully so that it's negative. See, in this case, if I am budgeting these accounts where I want them to be, I'm going to end 2022 with a negative balance. But I probably will not spend 100% of my appropriations. In those counties, it's understood that if you budget it fully, but you carry over to the new year with less money, you're not going to be able to appropriate what you've got here. You can only appropriate your real certified resources available in the new year. So make sure you understand whether your county wants you to budget to zero and footnote where you want to add more, or budget past zero so that the figures are what you really want to budget for the new year. That's all based on your county. So once you've finished your worksheet and you're ready for your meeting, again, you want at least one copy for you to look at with account codes, because you need to answer questions about that. So the fiscal officer should always have the budget printed, and I'm going to print shows the same thing, so I'm going to show you display. You're going to want to choose all of your funds, account codes, and footnotes for your working copy and print that. If you don't want the governing board members to see the account codes because they don't look at it that deep, you wouldn't give them the account code copy. You would give them the copy that is formatted just like the budget. And let me show you that so you can see. There's absolutely no account code structure here. All you see is the figures that lump up to a category. So for revenue and expenditures, there's no account code detail. And this is the version that you file with the county auditor. They do not need to see all of the account codes that make up these expenditures. Not at all. But internally, you may want to use those as your working copies with your board and your department heads. Okay, once your budget is finalized, you will print 3 copies in its final version that look like this, because you want a copy of exactly what's filed to show audit. So under budget, reports, and statements, we find the 7 companion reports to the financial worksheet. Now, in the old days, the county used to send you a booklet, and these were just part of the pages in the booklet. Since we've been using UAN to produce the financial worksheet, a lot of people forget to include these reports with their tax budget. They are required, and you could find yourself filling those out on the fly at the last minute if you don't pay attention to them now. So make sure that you look at your tax budget that was filed last year so that you understand the format required. And let's take a look at these one at a time. Okay, we're going to add Schedule A first, because Schedule A is usually the cover sheet for your financial worksheet. So this is page 1 of the tax budget. And you can see you choose your fund, type the description of the levy, and then the amounts in these columns. The county auditor is going to enter these last 2 columns. You could leave all 4 of those columns blank. This is what the report looks like. Notice where I've got a yellow highlighted. I always signed this page. There's no place for a signature line for the fiscal officer, but I always signed it here. Don't ask me why. But it just seems like it needs a signature on it. And that's how I did it. So you can see that each of these, the fund descriptions and the levy description, are filled out by you on the add form. And then you select them and print. And this is going to complete Schedule A, cover sheet. Schedule B is page 2. You can see when you click the add button that you select your fund and your levy, and these are different. Let me show you this one. These are for levies outside the 10 mil limitation. So what goes on this page is not exactly the same that went on page 1. Some of these are going to be carried forward to page 1, but it needs different information. Add a line for each of these levies, the date they were voted in, how many years, and the description of the levy, maximum rate to be levied, and the county auditor's estimate. And these are going to be carried forward to Schedule A. Right, the next one, permanent improvements, is pretty simple. If you did capital outlay in any place in your budgets for any fund, you should add each of those items to permanent improvements. Simply a fund description. I don't know a lot of entities that number their projects, so you could leave that blank, and then the estimated cost. So the report looks like this. It's just a list of the things that you've budgeted as permanent improvement and what fund will be paying for them. So if you've got 2 funds that are going to pay for them, you would have 2 items listed with the same project name and each fund, the amount each fund will be putting toward that project. Next, we have the final judgments. I've never known a single person that needed to do this. If it's something that does not apply to you, so for example, you don't have any final judgments, use the print blank button to print a blank form to include with your budget so your county auditor and budget commission know that you didn't just ignore it, it doesn't apply to you. This is what the form looks like. Very simple and straightforward. The description, the amount, the fund that pays it. Our next is bonds. So it's called bonds, but it's bonds, notes, and other indebtedness. So its purpose, the purpose for the loan, the authority under Ohio Revised Code, issue, due date, rate of interest, amount outstanding. So you can see it's called bonds in UAN, but you can see it's the exhibit of bonds, notes, and certificates of indebtedness outstanding January 1st of the coming year, and bond retirement fund requirements for coming year. So you can see what they want is on the blank. So you could print the blank ones to get a look at them before you start entering items. And again, you click the add button, add each item one at a time and click save, and then select them all and print to get a complete list. Budget certificates. Most people just enter each of the funds and click save, choose the next fund, click save, choose the next fund. This is your official certificate that will be signed by the county budget commission. Okay, so most people simply list their funds, then allow the county auditor to complete the other fields. And you could print a blank one as well, but most people like to print their funds so the county auditor doesn't forget one. Make it easy. The last one is the county auditor's estimate. This one's different. For your fiscal year beginning, you simply add the January 1st, 2022, and the report will print. This was always the back page of the booklet, and when you take your copies in, you can get them file stamped right here. And so if you're actually taking them in, take your 3rd copy with you. You have to file it in triplicate, and they hand you one back with a file stamp on it. If you mail them in, you just mail in the 2 and make a note of when you mailed it. Keep a copy of your cover letter. Those are the 7 companion reports that go along with the budget financial worksheet. So don't forget to do those. Print the blanks for the ones that do not apply to you so that your budget commission knows that you didn't forget something. Thank you for watching the UAN budget video. Don't forget to self-report your training time spent watching this video. The Access Portal website is right there on your screen. If you have any questions about how to self-report, please do not contact UAN. We cannot help you, but you can email your questions to fiscalintegrityact@ohioauditor.gov, and they can assist you.